Welcome to this deep dive, and we are going to be taking a look at some Texas commercial real estate.
Sounds good.
And we're going to be dissecting a recent email newsletter from Eureka Business Group.
Okay.
And the thing that first caught my eye was this line, "Did you know you can listen to this email?"
Oh, wow.
Now, that's a modern approach.
It is. I think it's a clever way to acknowledge that we're all busier than ever these days.
Yeah.
Being able to absorb information while you're on the go is a huge plus for busy investors.
Right.
But beyond the delivery method, what really piqued my interest was the overall tone of this newsletter.
Okay.
There's a distinct sense of optimism about the Texas market.
Yeah, it sounds like things are heating up after the elections. They mentioned increased activity from big investors, new funds being raised, and even lenders becoming more active.
Yeah.
That all sounds pretty encouraging, wouldn't you say?
Absolutely.
Yeah.
It seems like there's a renewed sense of confidence in the market.
Okay.
And what I find particularly interesting is that this optimism isn't just limited to the big players.
Right.
Eureka Business Group is also reaching out to individual property owners with a unique offer of free broker's opinion of value service.
And that's something I wanted to ask you about.
Okay.
Even if you're not actively looking to buy or sell,
Right.
why is knowing your property's current value so important?
Well, it's crucial for a couple reasons.
Yeah.
First, it's essential for tax planning purposes.
Right.
Knowing your property's accurate value ensures that you're paying the correct amount of property taxes.
Okay.
Then there's the potential for refinancing.
Right.
If your property has appreciated significantly, you might be able to secure a more favorable loan.
Okay.
And beyond those practical applications, understanding your property's value simply puts you in a stronger position for any future financial decisions, whether it's negotiating with partners or planning for your long-term investment strategy.
So it's about having a clear picture of your assets.
Exactly.
Now let's get into the heart of this newsletter.
Okay.
The properties themselves.
Yeah.
Eureka Business Group has showcased a really diverse portfolio. And they've conveniently categorized them by price range, starting with properties under $2 million.
Okay.
We see a mix of industrial flex and even medical spaces.
Exactly. And what's interesting here is that even within this lower price range, there are opportunities for different investment approaches.
Okay.
For instance, they highlight a 6,500 square foot industrial building with a large gated yard, full HVAC, and a strong tenant already in place.
Okay.
This seems like a solid option for someone seeking a turnkey operation with relatively predictable cash flow.
Then there's this 4,000 square foot flex venue space outside the city limits.
Okay.
It's been completely renovated this year with all new HVAC bathrooms and even a commercial-sized septic system.
Wow.
What I found intriguing about this one is its location right in the path of DFW's expansion.
Location, as always, is key in real estate. Being in a growth corridor like that suggests strong potential for appreciation.
Okay.
As the area develops and demand for commercial space increases, the value of this property could rise significantly, making it an attractive long-term investment.
And let's not forget the medical condo, roughly 2,500 square feet, with a recently completed renovation.
Okay.
It has 7 years left on the lease.
Wow.
And get this, boasts an almost 8% capitalization rate.
Nice.
For those unfamiliar, this means the property is generating an annual income of nearly 8% of its value.
That's a really compelling figure, especially in the current market. Cap rates can fluctuate depending on factors like location, property type, and lease terms. But generally speaking, a higher cap rate indicates a better return on your investment relative to the property's value. So in this case, an 8% cap rate suggests a healthy balance between income generation and property valuation.
Now, moving into the $2 million to $5 million range, things start to get even more interesting.
Okay.
We see a shift towards properties that require a bit more active management.
Right.
Or present opportunities for what's called value-add investing.
You're right. This is where things get exciting for investors who are a bit more hands-on and have a vision for unlocking a property's full potential. For example, they've listed a 20,900 square foot flex building that's being presented as a value-add opportunity.
Okay.
It's currently 70% occupied and priced below its replacement cost.
Okay.
Which means building a comparable property from scratch would cost more.
So what exactly does it mean to add value to a property like this?
Essentially, it involves identifying areas for improvement that will increase the property's income potential or overall value.
Okay.
In this case, it could involve attracting new tenants to fill the vacant space,
Right.
potentially by making cosmetic upgrades, improving amenities, or even repositioning the property to target a different type of tenant.
Right.
It could also involve negotiating higher rents with existing tenants when the leases are up for renewal.
So it's about strategically investing capital to enhance the property's appeal and ultimately its financial performance.
Exactly.
That makes sense. Then we have a 14,750 square foot multifamily property with 21 units fully occupied and recently renovated.
Okay.
What's unusual here is that while it's under single ownership, it's structured as individual condos.
That's a unique structure that raises some interesting questions about the legal and financial implications. It might offer certain advantages in terms of flexibility or tax benefits,
Right.
but it's definitely something that would require further investigation before making a commitment.
Absolutely. Understanding the nuances of ownership structure is essential for any real estate investment. And rounding out this price category, there's a 5,136 square foot core urban retail space in a prime Dallas location.
Wow.
They emphasize its rarity in the lower Greenville submarket and the fact that it's fully occupied with 3 tenants.
Scarcity often translates to value in real estate.
Right.
If it's a unique property in a highly desirable location, it could command a premium price and generate strong returns. Plus, having multiple tenants can provide a degree of income diversification, which can be a valuable risk mitigation strategy.
So we've seen a nice variety of properties under $5 million each, offering its own set of potential advantages and challenges. Now let's step up to the $5 million to $10 million range.
Okay.
What kind of properties do we see in this category?
We see a shift towards more established assets, often with less need for hands-on management.
Okay.
For example, there's a 9,990 square foot retail center located within Austin city limits. What's remarkable is the almost 7% cap rate, which is quite rare for Austin, especially given its booming market.
And it's currently occupied by national tenants, which often signals stability and lower risk for investors?
That's right. National tenants typically have strong credit ratings and longer lease terms,
Okay.
making them highly desirable for investors seeking predictable and reliable income streams.
Then there's a 4,127 square foot single tenant property leased by a high-performing tenant with built-in annual rent increases.
Okay.
This seems like a relatively low-risk passive investment with consistent return.
It does, and the built-in rent escalations provide a hedge against inflation, ensuring that your income keeps pace with rising costs.
Now, things really get interesting when we move into the big leagues properties over $10 million.
Here we see a mix of large-scale opportunities with the potential for significant returns, but also higher price tags and often more complex management needs.
The first property in this category is a 76,847 square foot retail center presented once again as a value-add opportunity.
It has some compelling features like high traffic highway frontage and a favorable parking ratio, both of which are essential for retail success.
Then there's a 9,500 square foot single tenant property with a triple net lease structure in a very affluent area.
Okay.
With 134,000 vehicles passing daily, it boasts incredible visibility.
Wow.
Plus, it has a brand new 15-year lease and zero landlord responsibility.
Now, for those unfamiliar with the term, a triple net lease means the tenant is responsible for most of the operating expenses, including property taxes, insurance, and maintenance.
Right.
This can be a huge advantage for investors seeking a truly passive investment with minimal hands-on management.
So it's a pretty attractive option for someone who wants consistent income without the day-to-day responsibilities of property management.
Exactly. And with a 15-year lease in place, you can project your cash flow with a high degree of certainty.
Next, we have a massive 325,300 square foot industrial park comprising 10 buildings pitched as a value-add opportunity with below-market rents in a growing market. This sounds like a play for an investor with a long-term vision and the resources to handle a large-scale project.
It definitely requires a different mindset than investing in a stabilized single-tenant property.
Right.
It's about identifying hidden potential and having the capital and expertise to unlock it. Repositioning a property of this magnitude involves careful planning, execution, and often a longer time horizon to realize the full return on your investment.
So it's not for the faint of heart, but the potential rewards could be substantial.
Absolutely. It's a higher risk, higher reward proposition.
Okay.
Then they highlight a 59,355 square foot retail center on Coit Road in an affluent neighborhood with below market rents.
This seems like another opportunity to strategically increase rents over time and boost the property's value?
It does. And the affluent demographics of the surrounding area suggest a strong potential customer base for retail businesses.
And finally, they showcase an 11,200 square foot retail center billed as a trophy asset in a very affluent area with below market rents.
Now, the term trophy asset is often used to describe a property that's considered exceptional in terms of location quality and desirability.
Right.
These properties often command premium prices and are sought after by investors seeking prestige and long-term value appreciation. This particular property is anchored by a Sprouts grocery store, which is generally considered a highly desirable tenant.
Having a strong anchor tenant like Sprouts can attract other high-quality businesses to the center, creating a synergistic effect that benefits all tenants and enhances the property's overall appeal.
Exactly. A strong anchor tenant can drive foot traffic, increase customer dwell time, and create a sense of vibrancy that makes the entire center more attractive to shoppers and potential tenants.
So as you can see, Eureka Business Group has presented a truly diverse range of commercial real estate opportunities in this newsletter, spanning various property types, price ranges, and investment strategies.
It's like a buffet of options, catering to different risk appetites and investment goals.
Right.
From turnkey operations to value-add plays, from stable cash flow to long-term appreciation potential. There's something here for everyone.
Now, before we jump into the next part of our deep dive, let's pause for a moment and consider this.
Okay.
If you had to choose one of these properties to explore further, which one would it be and why?
Hmm.
What about its location, tenant profile, or potential for value creation resonates with you?
Let's think about that.
Think about it, and we'll pick up this conversation in part 2. Welcome back to our deep dive into the Texas commercial real estate market. I'm still thinking about all those properties we discussed in the first part.
Yeah, me too. It's amazing how many different avenues there are for investment.
It is quite remarkable. And I think this newsletter from Eureka Business Group does a great job of not just showcasing individual properties,
Right.
but also hinting at some broader trends and strategies shaping the Texas commercial real estate landscape.
You're right. It's
Yeah.
like they're giving us a peek behind the curtain of the market.
What trends jumped out at you?
One of the most prominent themes is this focus on value-add opportunities.
Okay.
We saw examples of this across various price ranges,
Yeah.
from that flex building under $5 million to the massive industrial park over $10 million.
Right.
It seems like there's a real belief in the potential to enhance value through strategic improvements or repositioning.
That makes sense, especially in a dynamic market like Texas.
Yeah.
You're not just buying an asset, you're investing in its future potential.
Exactly. And it speaks to a certain level of confidence in the market's continued growth. Instead of simply acquiring stable income-producing assets, investors are actively seeking out properties where they can leverage their expertise and vision to generate even greater returns.
So it's not just about being a landlord, it's about being a value creator.
Precisely. And this approach requires a different skill set.
Okay.
You need to be able to analyze a property's current state, assess its potential, and develop a strategic plan to unlock that potential through targeted investments and improvements.
It sounds like a perfect blend of analytical thinking and creative vision.
It is.
Ah,
And it's not for everyone. Of course, value-add investing often involves a higher degree of risk
right.
and requires a certain level of comfort with hands-on management.
Okay.
But for those who are up for the challenge, the rewards can be substantial.
Another thing that struck me was the emphasis on location.
Okay.
Time and again, Eureka Business Group highlighted the specific location of their properties,
Right.
pointing out factors like proximity to growth corridors, affluent demographics, or high traffic areas.
That's no surprise.
Right.
Location is and always will be a fundamental driver of value in real estate.
Right.
But what's interesting here is that they're going beyond simply stating the location. They're providing context and highlighting the unique characteristics that make these locations particularly desirable for investors.
Right. It's not just about being in Texas. It's about being in the right pocket of Texas.
Yeah.
For instance, remember that flex space they highlighted?
Yeah.
It's strategically positioned in the path of DFW's expansion,
Right.
which suggests strong potential for future appreciation as the area continues to develop.
Exactly. And then there's that core urban retail space in the lower Greenville submarket of Dallas.
Right.
They emphasized its scarcity, implying that it's a unique find in a highly sought-after location.
So it's about understanding the microdynamics of specific areas and identifying those that are poised for growth or offer distinct advantages.
Absolutely. And it's about aligning your investment strategy with the characteristics of that location.
Okay.
For example, if you're seeking stable long-term income, investing in a property with strong demographics and a proven track record of tenant occupancy might be a good fit. But if you're looking for higher growth potential and are willing to take on a bit more risk investing in an emerging area that's expected to experience significant development, could be more appealing.
Now, in addition to location and the concept of value add, I also noticed a recurring emphasis on tenant quality and lease structures.
Okay.
They highlighted properties with strong tenants, national tenants, and long-term leases.
Right.
And remember that single-tenant property with the triple net lease?
Yeah.
That seemed like a very attractive option for passive investors.
It is. Tenant quality and lease structure are crucial factors to consider for any commercial real estate investment.
Right.
They directly impact your income stream, your risk exposure, and the overall stability of your investment.
Can you elaborate a bit more on why these factors are so important?
Of course. Let's start with tenant quality.
Okay.
Having a strong tenant with a good credit rating and a solid business model is crucial for ensuring consistent rental income.
Oh.
You want tenants who are likely to pay their rent on time and fulfill their lease obligations.
Right.
National tenants are often seen as more desirable
Right.
because they typically have deeper pockets and a proven track record of success.
And what about lease structures?
Okay.
How do those affect an investment?
The lease structure dictates the terms of the agreement between the landlord and the tenant.
Okay.
It outlines things like the lease term, the rent amount, who's responsible for operating expenses, and other important details.
Right.
A triple net lease, as we discussed earlier, is one where the tenant is responsible for most of the operating expenses associated with the property.
Right. So it's a pretty hands-off arrangement for the landlord.
Exactly. It can be a very attractive option for investors seeking passive income without the hassle of day-to-day property management. But it's important to note that not all triple net leases are created equal.
Right.
You still need to assess the creditworthiness of the tenant and the terms of the lease to ensure it's a truly beneficial arrangement.
So it's not just about the label, it's about the substance of the agreement.
Precisely. And that's true for any lease structure. You need to carefully review the terms, understand the responsibilities of both parties, and ensure it aligns with your investment goals and risk tolerance.
It's fascinating how this newsletter, while showcasing individual properties, also serves as a masterclass in commercial real estate investing.
Yeah.
They're subtly educating us about key concepts and strategies without hitting us over the head with a textbook.
That's the beauty of it. They're weaving these educational elements into a compelling narrative that keeps us engaged and eager to learn more. And they even encourage further exploration by inviting us to check out their podcast for the latest market news and insights.
Right. It's clear that they're not just trying to sell properties. They're trying to build a relationship with potential investors based on trust and knowledge sharing.
I think that's a really smart approach.
Yeah.
In a complex and often opaque market like commercial real estate, having a trusted advisor who can provide you with objective information and guidance is invaluable.
Absolutely. Now, before we move on to the final part of our deep dive, I want to circle back to the concept of value-add opportunities. We've touched on it several times, but I think it's worth digging a little deeper into what it actually entails in practice.
I agree. It's a term that's often thrown around, but it's important to understand the specifics of what makes a property a true value-add opportunity.
So let's break it down. What are some of the key characteristics we should be looking for when assessing a property for its value-add potential?
Well, first and foremost, there needs to be room for improvement. This could mean anything from cosmetic upgrades to major renovations or even a complete repositioning of the property to attract a different tenant mix.
So it's not just about finding a property that's undervalued, it's about finding a property where you can actively add value through strategic investments and improvements.
Exactly. And it's crucial to have a clear vision for how those improvements will translate into increased rents, higher occupancy rates, or a more desirable asset that can be sold for a profit.
So it requires not only a keen eye for potential, but also a solid understanding of market trends, construction costs, and tenant demands.
Precisely. You need to be able to assess the market, analyze the competition, and understand what tenants are looking for in a particular location and property type. And you need to be able to translate that knowledge into a concrete plan that will enhance the property's appeal and ultimately its financial performance.
Now, you mentioned earlier that value-add investing often involves a higher degree of risk. Why is that?
Well, you're essentially betting on your ability to execute your vision and achieve the desired results. There are many factors that can affect the outcome of a value-add project,
Right.
from unforeseen construction costs and permitting delays to difficulty attracting tenants or unexpected changes in the market.
So it's not just about having a good idea, it's about being able to effectively implement that idea and navigate the complexities of the real estate market.
Absolutely. It requires a combination of vision expertise and a certain level of risk tolerance. But for those who are willing to put in the effort and manage the risks, the potential rewards can be significant.
And we've seen from the Eureka Business Group newsletter that there seems to be no shortage of value-add opportunities in the Texas commercial real estate market right now.
That's right. And it's not just limited to a particular property type or price range.
Right.
We've seen examples of value-add opportunities in industrial retail and even multifamily properties across a wide spectrum of price points.
So whether you're looking to invest a few $1,000,000 or tens of millions, there's likely a value-add opportunity out there waiting to be discovered.
Absolutely. And with the right knowledge expertise and a bit of entrepreneurial spirit, you can potentially unlock significant value and achieve impressive returns. I'm curious, what aspects of value-add investing resonate most with you? What type of property would you be most drawn to, and what kind of improvements would you envision making to enhance its value?
That's a great question. I think I'm drawn to the idea of repositioning a property to better suit the needs of the current market. Imagine taking an older office building and transforming it into a vibrant mixed-use space with retail, residential, and co-working components. That kind of transformation could breathe new life into a property and create value for both tenants and investors.
That's a fantastic example. And it speaks to the creative potential inherent in value-add investing. It's about seeing beyond the current state of a property and envisioning its highest and best use, then developing a strategic plan to make that vision a reality.
It's about being a problem solver, an innovator, and a bit of a visionary all rolled into one.
Exactly. And that's what makes it such an exciting and rewarding field. Now, before we wrap up this part of our deep dive, let's shift gears for a moment and talk about Eureka Business Group themselves.
Okay.
They've presented us with all these intriguing properties and valuable market insights.
Right.
But what about the company behind it all?
You're right. We focused on the content of their newsletter,
Yeah.
but it's important to understand who they are and what they bring to the table.
Well, first and foremost, they have a wealth of experience. They've been in the commercial real estate business since 2008, which means they've weathered some significant market cycles, including the Great Recession. That kind of experience is invaluable.
It speaks to their resilience and their ability to navigate challenging market conditions. But experience alone isn't enough. What else makes them stand out?
They emphasize their expertise in various facets of commercial real estate, from acquisition and disposition to property management and leasing.
Okay.
This suggests they offer a comprehensive suite of services to their clients, catering to their diverse needs.
So they're not just brokers, they're partners throughout the entire investment lifecycle.
Exactly. They're there to guide you through every step of the process, from identifying the right property to managing it effectively and ultimately realizing your investment goals.
And they also highlight their focus on providing creative solutions.
Right.
What does that tell us about their approach?
It suggests they're not simply applying a cookie-cutter approach to every deal.
Right.
They're willing to think outside the box to tailor their strategies to the specific needs of their clients and to find innovative solutions to complex challenges.
So they're not just transactional, they're problem solvers. They're looking to build long-term relationships with their clients based on trust, expertise, and a shared commitment to success.
Precisely. And I think that's what sets them apart. It's not just about buying and selling properties. It's about forging partnerships and creating value together.
Now, as we head into the final part of our deep dive, I'm curious to hear your thoughts on this.
Okay.
Given all that we've learned about the Texas commercial real estate market and Eureka Business Group's approach, what do you think are the most crucial factors for success in this market? What advice would you give to someone considering investing in Texas commercial real estate?
That's a great question, and one that deserves careful consideration. I think the most crucial factors for success in any real estate market, but especially in a dynamic market like Texas, are knowledge, strategy, and partnerships.
Can you elaborate on each of those?
Of course. First, knowledge is paramount. You need to understand the market dynamics, the trends, the risks, and the opportunities. You need to be able to analyze properties, assess their potential, and make informed decisions. This is where resources like Eureka Business Group's newsletter and podcast can be incredibly valuable.
So it's about doing your homework and staying informed.
Exactly.
Okay.
Then there's strategy.
Okay.
You need to have a clear investment strategy that aligns with your goals, your risk tolerance, and your overall financial plan. Are you seeking stable cash flow, long-term appreciation, or a blend of both?
Right.
Are you comfortable with hands-on management, Or do you prefer a more passive approach?
Right.
These are all questions you need to answer before you even start looking at properties.
So it's about having a roadmap, a clear vision of where you want to go and how you're going to get there.
Precisely. And finally, there's partnerships.
Okay.
Real estate investing is rarely a solo endeavor. You need a team of trusted advisors, from brokers and attorneys to lenders and property managers.
Yeah.
Finding the right partners who share your values and understand your goals can make all the difference in your success.
So it's about building a network of support, surrounding yourself with people who can guide you, advise you, and help you navigate the complexities of the market.
Exactly. And I think Eureka Business Group, with their emphasis on long-term relationships and creative solutions, exemplifies that partnership approach.
Right.
They're not just looking to close a deal. They're looking to build lasting connections and help their clients achieve their investment aspirations.
It's about creating a win-win scenario for everyone involved.
Absolutely. And that's what I find so compelling about the Texas commercial real estate market. It's a place where, with the right knowledge, the right strategy, and the right partners, you can truly create something special, something that benefits not just yourself, but also the community around you.
Now, as we move into the final part of our deep dive,
Right.
I want to leave you with this thought.
Okay.
Imagine yourself 5 years from now having made a successful investment in Texas commercial real estate.
Okay.
What does that success look like to you?
What impact has your investment had on your life, on your finances, and on the community you've invested in?
I'll think about that.
Think about it, and let's explore those possibilities in our final segment. Welcome back to the final part of our deep dive into the Texas commercial real estate market.
Yeah, it's been quite a journey exploring the landscape, through the lens of Eureka Business Group's newsletter.
Yeah, we've uncovered some valuable insights along the way, from the post-election market optimism and the prevalence of value-add opportunities to the critical importance of location tenant quality and forging those strategic partnerships.
Right, and we've even delved into the mindset of a successful investor, exploring the blend of analytical thinking, creative vision, and calculated risk-taking that drives, profitable decisions.
Yeah, but before we wrap up, I think it's important to distill some key takeaways, some actionable insights that our listeners can carry with them as they navigate their own real estate journeys. I agree. Let's synthesize what we've learned and provide some guiding principles for those considering investing in Texas commercial real estate.
First and foremost, it's clear that the Texas market is vibrant and full of potential.
Yeah. Despite some broader economic uncertainties, there's a palpable sense of optimism fueled by a confluence of factors.
We're seeing strong population growth, a business-friendly environment, and a diverse economy that's proving to be resilient in the face of challenges.
And as we've seen from Eureka Business Group's carefully curated selection of properties, there's a wide range of investment opportunities available, catering to different risk appetites and investment goals.
Whether you're drawn to the steady income of a triple net leased property or the potential for outsized returns through those strategic value-add plays, the Texas market offers a diverse menu of options.
But it's not just about choosing a property type or a price point.
Right.
It's about understanding the nuances of location and aligning your investment strategy with the unique characteristics of specific submarkets.
Remember those properties in growth corridors, like that flex space in the path of DFW's expansion?
Yeah, or that core urban retail space tucked away in a highly desirable pocket of Dallas.
These are prime examples of how location can significantly impact a property's value and its potential for future appreciation.
And we can't overlook the importance of tenant quality and lease structures.
Absolutely. These factors are fundamental to ensuring stable cash flow and mitigating risk.
Properties with strong tenants, particularly those with a national presence and long-term leases, often command a premium and provide greater peace of mind for investors.
And of course, there's the intriguing world of value-add investing, where astute investors can unlock hidden potential through strategic improvements or repositioning.
This strategy can be particularly rewarding in a growing market like Texas, but it also requires a certain level of expertise, risk tolerance, and a clear vision for how to maximize a property's value.
Right, remember that massive industrial park we discussed?
Yeah.
The potential for transformation and value creation was immense, but it also demanded a long-term perspective, significant capital investment, and the ability to navigate the complexities of a large-scale project.
And beyond the properties themselves, we've gained insights into the approach of Eureka Business Group, which I think holds valuable lessons for any investor.
They've positioned themselves not just as brokers, but as educators, advisors, and problem solvers.
Right. Their willingness to share market knowledge through their newsletter and podcast demonstrates a commitment to transparency and empowering potential investors with the information they need to make informed decisions.
And their emphasis on building long-term relationships and providing creative solutions speaks to a partnership-driven approach that aligns with the best interests of their clients.
So as we draw this deep dive to a close, I encourage you to reflect on what you've learned and consider how these insights might inform your own investment journey.
Whether you're a seasoned investor or just beginning to explore the world of commercial real estate, remember these key principles.
Do your research, develop a clear strategy, seek out trusted advisors, and approach the market with a balanced perspective of optimism and prudence.
And above all, remember that investing in real estate is not just about financial returns.
It's about creating value, building communities, and leaving a positive impact on the world around you.
So as you embark on your own real estate ventures, do so with a sense of purpose, a commitment to excellence, and a passion for making a difference.
And who knows, maybe one day we'll be featuring your success story in a future deep dive.
Until then, happy investing, and thank you for joining us on this exploration of the exciting world of Texas commercial real estate.